Good evening, everyone. I am Rashi Nagar, analyst at IFA Global, and it's my pleasure to welcome you all to this insightful webinar. Thank you for taking the time to join us today. We are here to discuss a topic that's more than ever relevant: rising financial risks and the strategies to navigate the storm. During this session, we will dive into the recent fluctuations in the Indian rupee and explore actionable insights in the world of forex and wealth management. I am confident this webinar will provide immense value and answer many of your pressing questions and concerns. It is now my honor to introduce our esteemed speaker, Mr. Abhishek Goenka, founder and CEO of IFA Global and Billionz. With nearly 2 decades of rich experience in FX treasury and wealth management, Mr. Goenka has been a trusted advisor to hundreds of companies and family offices across India and Asia. His strategic foresights and dedication have helped clients create substantial value, earning him several awards along the way. Some of his notable recognitions include the 40 Under 40 Young Entrepreneur Award, the Best Treasury Risk Management Advisory Award 2023, and recognition as the Best FX and Treasury Advisory Company at the CFO Vision and Innovation Summit Awards 2024. We are privileged to have him with us today to share his insights and guide us through these uncertain times. With that, let's get started. Over to you, Mr. Goenka.
Thank you, Rashi. Hi, just want to check, how are you guys today? This beautiful Thursday evening. And I hope my voice is loud and clear. If you can just say yes, yes, so I know that everybody can hear me properly. Type yes, yes, so I can hear. Great. Excellent, excellent. And I hope everybody can look at my screen, which is a presentation. Second. Next. Great. So, So as you all know, and some of the people who have attended our webinars many times know that we like to keep it interactive. And at the end of the webinar, we want to ensure that you take some solid value out of this so that you can use it in your company, use it for creating wealth for yourself and your family. Yeah. So as now we have two companies, one is India Forex, another one is Billionz. And now as a firm, we are very, very specialized in terms of all the aspects of asset classes around the world. So it's not only FX now, it's about equity, interest rates, real estate, and everything around the world. So series of webinars would be coming from our side, would be actually covering every area of how the Indian and the global markets are behaving and what are the opportunities. So let's try to get some opportunities which is available in the market and some of the risks that we have to take into account in the current environment. Great. So that's the structure. We'll try to, of course, talk about the dollar rupee and the dollar index and what's happening around the world. We are seeing so much of movement in the currencies, interest rates in Japan, in US. We're seeing movements across equity markets, and everybody's scared about 2025, that what's going to happen and how should we plan our business. So we're going to touch upon what are the things that we should do and what are the things we should not do, so that you can take a wise decision. And this webinar is going to be recorded and it's going to be on YouTube. So Please feel free to show it to your team, to show it to your friends, if you find something interesting. Great. So in the first half, it will be more on the foreign exchange and dollar rupee. In the second half, we're going to talk about multi-assets, gold, silver, US, China, Indian equities, and how should you build a portfolio and what the valuations are like, and followed by some final takeaways. Great. So let's move forward. So what do you see by this chart? Because the best way, we cannot predict the future, but we can obviously learn from history that how in the history the dollar has behaved whenever there was an interest rate cut. So any thoughts? What do you see over here? And just make it interactive so you can just type it around on the right, and I can see your thoughts, and then you can make it a little interactive. Yeah. So any thoughts on what do you see here? Can you see the slide, or is this gone? Excellent. So any thoughts? What are you seeing here? So in this slide, if you can see that you actually, whenever the interest rates cuts have happened, it has happened to the extent of 2.5% in the US. In some cases, it has been even more. And whenever the interest rate cuts have happened, we have typically seen the dollar weakening a lot. And it's not very uncommon when we have seen the dollar actually weakening 5, 10, 15%. And that can happen in 6 months, that can happen in a year. So everybody keeps asking me whether euro will go to 1.14, 1.15, or can it go to 120? The question is, whenever there is a dollar interest rate cut, the chances are that the movements are going to be very wild. So if the euro journey started from 1.04 and it's now at 1.14, we already moved up by around 7-8%. And can it go to 120? Who knows? But the trajectory is definitely upwards. So accordingly, if you actually go back to the history and see how the euro behaved, or the Japanese yen behaved, or the GBP behaved against the US dollar, you will get your answer. And then, of course, with that context, you can actually try to understand that what's possible in the future. And accordingly, you can plan your balance sheet and cash flow hedges accordingly. Right? So, second. So we can clearly see that 5 to 20% movements have happened in the dollar rupee, and the term structure is steeping in America now. There is another concern that people are having, that whether US has a lot of rollover of debt. Estimates say $6 to $8 billion in the next $1 trillion in the next couple of years' time. And we also know that the world is operating in silos, and people are not liking the way Donald Trump is playing around with tariffs, and everybody has been, and the way they held on to the reserves of Russia, and the way the dollar is going to depreciate. So people have started selling the US dollar reserves. And China, I think we were at $1.1 trillion of US reserves. And now they have come to around $750 billion. So they're actually selling a lot of US reserves that people were holding. And the money is going to Bitcoin, gold, and commodities. And that's the trend which has started. Whether it's going to be a multi-year trend, whether it's going to be more short-term, nobody knows. But definitely the trend is on. And people don't like holding the US treasury right now, especially when there are so much of silos around the world. One interesting thing which has also happened is Japan, which had almost 0% interest rates. Now Japanese interest rates are also going up. And the 30-year bond yield is around 3.5%, unheard of, whereas the 10-year is still pretty low at 1.5%. That means in the future, people are expecting improving growth in Japan and also the inflation to go up. Now, my friends, we know that Japan has always been a funding currency. People used to borrow from Japan and put it across America, and Japanese used to spend money around the world borrowing there and investing in America. Now, what happens if Japanese bond markets give competition to America? Just think over it. The Japanese yen, which used to be at 155, 160 a dollar, has already gone to 140 to a dollar. So it shows that the carry trade is kind of unwinding. Now, Japanese carry trade unwinding becomes very tricky because then large asset price movement starts happening. And I think this have started happening. So we have to be very careful with our global asset allocation around the world, that wherever the Japanese money has gone, and if the money starts coming back to Japanese yields, then we are going to see a reverse happening. So US is in dire straits. Everybody knows it. The only thing is they can do whatever they feel like. They've been printing money left, right, and center. We all know they have a huge debt, $36, $37 trillion. Now their interest payments have gone to $1 trillion per year, which is alarming. And that's the reason we have seen the rating downgrade, though it should have happened a long time back, but it doesn't matter to America. I mean, I'll not be surprised if we start printing again. You know, they say that nobody's buying our debt. Let's buy our debt altogether. So that's the kind of scenario. And lately, what is happening is that earlier US economy was doing very good. All the data was coming out very nice. But now the high frequency data in America have actually deteriorated. If you see the wage numbers, the PMI numbers, and various other data, CPI numbers now, data, have all started deteriorating, and GDP numbers have also come down. So the situation is that at one end, the interest rates are going to going up right now in America because people want more interest to refinance their debt. So 10-year is still going up, it's still not falling down. At one end, Donald Trump is asking them to cut rates. The other end, the numbers are getting bad in America. So it could be a situation where there could be a stagflation. We don't know. But definitely America is not looking great. And along with that, they're talking about corporate tax cut. They're also talking about, because of this, there could be an increase in fiscal deficit. So from all angles, I think America is not looking too great. So there's no reason one should start buying the US dollar until unless something breaks around the world. Because if something breaks around the world, the first reaction that happens is that go and buy US dollar because it's a safe haven currency. But this time around, we have to see what will break. And we don't know what is going to break. But definitely the way the US is behaving, the way Japan is behaving, and the way the global debt cycle have improved, they've gone up. I think it's a very, very tricky scenario. And if you actually see, the asset classes have also gone up around the world. So everything is at lofty valuations. So as we discussed that US is running very high deficits and there's a downgrade. Long-term inflation expectations are stable, but the biggest concern right now is how are they going to roll up the debt that they are having, which I just mentioned. And the entire world is watching that. That are they going to do more QE, or they are going to be comfortably able to roll over? And even if they are able to roll over, are they going to roll over at 5%? Just give it a thought. Because if they're rolling it over at 5%, then what is going to be their overall debt bill? That's another concern that everybody is going to have. And then in that case, the fiscal deficit is going to go up further. So I think the view that we at IFA have been taking last 5-6 months is that the dollar trend global, that is a dollar index, is broadly weak. And any correction in the dollar index is a chance to short the US dollar against the other currencies. So if euro comes down, buy. GBP comes down, buy. That's the broad this thing. And Japanese yen, it goes to 150, 155. Again, one should take a reverse position aiming at 140, 135. That's the broad view. So as I was saying that in the chart, it's clearly visible that we need lower interest rate to service high US debt. 5% is not sustainable. Very high chance that going forward, US might have to cut rates because of growing sloth and also to finance the debt. This is very important. I mean, people can take pics of that. So whenever there is a safe haven, which I was mentioned, so whenever there's a crisis in the world, the dollar gets very strong, like in 2020, 2000, 1993, or 2013, when the overall European crisis happened, the US dollar gets strong. Whenever the rest of the world is doing good, but America is not doing good, that's the time the dollar weakens, which is in the middle. And we are somewhere in the middle right now, right? And whenever the US does very well, like sometime back, the US economy was all in throttle. That's the time the US dollar was very strong for the last 3, 4, 5 years. You know, the dollar index was continuously appreciating all the way. Euro went down from 125 to almost parity. But this time around, we are somewhere in the middle. So there is a high chance that we are in the middle of the dollar smile. And I feel that until unless something really breaks and the money starts going to US dollar, I think we should be somewhere in the middle where the dollar starts weakening. So that's the few numbers that we can see. Broadly, the dollar has been weak against all the currencies, especially Japanese yen. I mean, just look at the way it has appreciated, and the way Taiwanese dollar appreciated in almost 2, 3 days, it appreciated by around 8, 10%. So I think we are in that phase where we are going to see those kind of movement overnight. So one has to be very, very careful when it comes to your cash flow and balance sheet hedges both, and ensure that we don't have a lot of risk open in the market. Yeah. So most important point for India is, of course, the balance of payment. And ultimately, it's all about demand and supply of US dollar, isn't it? So we saw that broadly, the numbers in India is not looking bad. In fact, even though the trade deficit number have gone up, and our service exports have actually been increasing because of GCC. People are building startups in Pune, Hyderabad, Gurgaon. Inward remittances have been very reversed. And even though we are not attracting a lot of money from abroad in terms of FPI, it has just started off with, I think, $2-3 billion has started off this year. And last 1.5 months has been decent. FDI is average at 2 billion. So broadly, we feel that one interesting thing which is happening and which is very relevant for everyone here is that earlier nobody used to borrow from the US. But now with the expectations that the US interest rates are going to come down, and also on an all hedged basis, long-term loans can get cheaper. People have started borrowing ECBs in US dollars for long-term loans. And you can start talking to your banks on this. And because of which, I think in March, we got $11 billion worth of ECBs. So that trend is again starting. So overall, if our balance of payment is $40-50 billion positive, then in that case, there's no reason why rupee should depreciate a lot. And most beautiful thing what works for India is the oil. And oil is also holding $60, $62, $63, which is another saving of at least $25-30 billion a year. So I think if inflows start coming in back, then obviously these numbers are going to further improve. The real effective exchange rate, which we track in our models, that has also improved a lot. It was all the way to 108. So rupee was very, very overvalued. Now it's come close to 100. So I think we are fairly valued now at 85.5, 86. And I think that this RBI regime is very, very okay with rupee moving both sides. The earlier RBI regime was very okay with rupee staying in that very tight range almost for 2-3 years. And the importers got very complacent. The exporters didn't want to sell dollars because the premiums were low and the rupee was not going anywhere. But now I think there is opportunity for both sides. You know, a couple of weeks back, we were seeing 84, and today it's 86. Sometime back, it was 88. So you can very well imagine the volatility in the market is close to 6-7%, and that's huge, you know. So in terms of reserves, also, we are seeing that we had lost a lot of reserves. You know, when the rupee was depreciating, RBI was selling dollars left, right, and center, and now they're again buying US dollar whenever the inflows are going to come in. They're going to build the reserves. So my view is, of course, they're going to make it back to $700, $800, $800 billion, and 900 and 1 trillion, and that's the mandate for India. And as soon as we start seeing the US dollar flows from abroad, when the valuations of Indian markets get okay, right now it's still expensive, then I think we're going to see a gush of liquidity. Because, you know, just imagine that if people have been putting in America for the last 15 years, and American markets have been going one side, and American markets are expensive from all standards, whether it be S&P, whether it be NASDAQ, we all know. Even a 5% of the money comes out of America, and we get even 5% of that money will amount to around $30-40 billion for India. So that's the scenario. So, and whenever that happens, I don't know when it's going to happen. We have to be very careful about how rupee behaves. And then our PE re-rating might also happen for India, because once liquidity comes in, it is possible that even though valuations are high, markets can still go up. So I'm not a big camp of investing a lot in the current environment in the stock markets, but if the liquidity comes, who am I to decide? I mean, the markets will still go up, despite the fact there are no earnings or less earnings in the market. I think the earnings is averaging around 9-10%. So it's very important to also understand that how's the interest rate cycle going to be? Because everybody is borrowing short-term credit, medium-term credit, long-term credit. So we have been seeing interest rates cuts by the RBI. Inflation is pretty low. We are very, very comfortable with inflation. Food prices are down, crude is down. So if you look at the OIS, which is the way we measure what is going to be the terminal rate, the last rate where the interest rate cycle is going to stop, that shows that 1 year and 5 year OIS is almost flat. That's around 5.6. That means when the rate cut cycles keeps happening, we will end up with somewhere around 5.5%. So I think if US starts cutting faster, people will start borrowing a lot of money from America, because India will not fall a lot in terms of interest rates. But if US falls down by another 1.5%, 2%, then I think all hedge basis American loans will become very cheaper. So take a note of that and keep a watch and start talking to your bankers and start engaging with them. And whenever that happens, you should actually take your loans above 86, 86.50 if you get, and take a dollar loan and, you know, hedge it through a cap. I'll come to that. But before that, let's have a quick conclusion on the plus and minus the rupee. So I think broadly, I'm not seeing a lot of minuses when I'm seeing a balance of payment positive and crude to be low, which is very relevant for India. And flows have also started. But I can see a lot of positives in terms of India with BOP plus, equity flows coming in, broad dollar weakness in the US. And, you know, inflation is very low. So I think I am more of a camp of a selling dollar rupee at every rise. And that has always worked out very well for us. Even it has gone to 88. it has come back to 84. So selling dollar rupee at every rise has always worked very well. So we're very, very comfortable with that strategy. In terms of Asian currencies, a lot of these Asian currencies have gone very strong. Look at this, Taiwanese dollar, JPY, etc. But in case of rupee, I think we are almost flat. In fact, from China, because China is very much relevant for India, and RBI keeps a very, very strong watch with China. So they don't want rupee to be stronger than China. They always want rupee to be slightly weaker than China. So rupee is slightly 1.5–2% weaker than China. I think so. That number of CNH China, the lower band and the upper end, and also how the Chinese currency is behaving with regards to India, that is something you should always watch. Put it on a desktop and watch it. That how China is behaving with respect to India. What's the oil price? What's your broad BOP numbers? And how the dollar index is behaving. Then you will get a broad sense of how the rupee is going to broadly behave. But don't get jittery when rupee gets very strong. Rupee is broadly a slow depreciating currency. I remember a lot of people got jittery when rupee came to 84 and started booking long term. Don't do that. Broadly, when you get a decent number, then you start booking dollar rupee. So what people have been doing now in terms of exports, this I've seen in the last 20 years of working with hundreds of companies, that whenever rupee gets strong, people start booking, and whenever rupee gets weak, people stop booking. Whereas it should be the opposite. It should always be like stock markets, whenever stock markets fall down, people start selling stocks. And the markets go up, people start buying more and more with higher risk. Actually, we should do the reverse. Whenever the rupee depreciates, start increasing your hedges, go up to maximum. And whenever the rupee appreciates, start canceling some contracts, book profits, and don't get jittery that time. So, and time and again, I have seen personally 7 to 8 cycles, and I have learned it the hard way that you should never do the opposite. Stop looking at media, stop looking at newspapers, stop hearing experts. If the rupee is depreciating a lot, please start selling dollars and start earning premiums. It has always worked in the long run. And start increasing your cash flow hedges, not only your balance sheet hedges. People have been doing a lot of structures in the market. Structures are great if you understand the structure and you understand, you keep a proper cushion of knock-in knockouts. We have been using it very, very actively, and I think it's worked very well for us. In some cases, we have been able to get something more than the forwards. Now, in case the forward rate is 87.5, we have been doing structures where we are getting 87.80, 87.90, and we have been doing TAF structures, and those have worked very, very well. So use those structures. Just be aware what are the knock-in knockouts levels you are taking on the structures, and do those structures when the walls go up, that volatility of 6–7%. For importers, I think it's very, very clear. I think the Seagulls have always worked very well. For some clients who are scared, they don't want to take Seagull structures, they can go for out of the money call option. So whenever the market is down and there's a risk that the market can go up, just buy an out of the money call option, especially when the walls are low, because the cost of the option is low. And whenever the rupee gets very strong, go and cover 3–4 months. Don't think. Like when it came to 84, 84.3, our normal policy used to be 1.5–2 months. We used to go cover 3–3.5 months. Now when it is 86, all those positions are very profitable. But that's a time when you have to take that leap of faith. And you have to understand that there is a nature of the currency. And that time, if you start listening to people too much, start watching television and listening to anchors, then it's not going to work, right? So use a lot of options now. A lot of options are there in the market. So use cash flow and balance sheet hedges. Some of the couple of options we have given. So there are some zero cost options where by paying a little bit premium or by making it zero cost, you can get a lot of participation of 2 rupees. And for imports also, we can do some risk reversals with barrier, or you can take out of the money call options whenever the bonds are cheaper. So I'm not getting into details, because it's a whole subject altogether and a lot of people don't do options. But this is going to be online. You can discuss with my team. They'll be happy to help you with this. Please keep putting your questions around so that people can keep answering in case we don't have time in the end. So this is the long-term borrowing, which I was saying. Start looking at borrowing in the US dollar. And the numbers the bankers are going to give you. Those numbers you start comparing with your rupee long-term loans. Because as I said, rupee interest rates are not going to fall down a lot. Maybe if something breaks in America, the dollar index interest rates are going to come down. And that's the time with an all hedge basis, you're going to get something cheaper. Do not take loans in any other currencies. I know at 155 to the Japanese yen, a lot of my clients were approached by people in the market, take loans in Japanese yen. And the Japanese yen is already at 140. Or don't take loan in Swiss franc. Swiss franc is a strong currency in the times of crisis or the time when people shun US dollar. People will generally buy the Swiss franc or Japanese yen. And Japanese yen unwinding trade has already started. So do not take ever loans in these two currencies. And if you decide to take a loan, make sure you take a loan on an all hedge basis if it's profitable, or else when these currencies get very strong. So if Japanese yen comes to 100, do it. But at 140 or 150, don't do it. And this is something that you should take note of. Strictly no loan in the cross currencies. You can take loan in the US dollar. And I've seen companies having very difficult times because to save 1 or 2%, they do this by keeping their exposures open, or they don't take hedges. I've seen that in 2008, and just don't do that. So now we come to the second part of the presentation. Now, this is going to be very interesting and it's going to be for all the people. We all have exposure to equities, bonds, REITs, etc. And I'm going to talk about how we look at developing a portfolio and how you can make a portfolio so that in the coming times when equity is not the only asset class which is going to go up, and possibly it could disappoint you in times to come because of valuations, you should be very open with other asset classes like REITs, long-term debt, private debt, and gold, silver to an extent. And US equity is not now because it's very expensive, but US equity is correct, then definitely US equity. So one thing I would like to point out that India and America, these are the only two markets which I get very comfortable because they are the only two markets which have continuously gone up in the last 25, 30, 40, 50 years. India, not 50 years. India, maybe from 1990 onwards, there has been times when the markets have fallen, but broadly you have got 12% CAGR. In case of US, S&P, you have got close to 10% CAGR. In case of NASDAQ, that CAGR has been around 14.5% CAGR. So these are fantastic returns in US dollar terms. So I still feel that American markets are very good as a asset class. The only thing is we have restrictions to invest in America to the extent of $250,000 only. But there are mutual funds in India which can give you American access, where you can invest in S&P and NASDAQ. Please explore them. So something, one should take whenever I meet family offices. So a lot of my clients have large books where they're handling thousands of crores. And a family office always taught things about optimizing the return. And not only, they're not excited about 20-25% return. In fact, they don't want that. They look at something like, okay, if I can get something around 12 to 15 by reducing my risk, I think I'll be more than happy. So even in the case where you are running a portfolio where you are just having 30% equity, a large chunk of debt and gold and US equity, you are able to get close to around 11% CAGR. Nifty is around 12.5% CAGR. General S&P 500 will be a 14% CAGR. So by reducing your risk to half, you can still end up at a CAGR of 11%. And if you just increase your equity component a little bit in US and India, you can get your CAGR number. So I don't think an all equity portfolio is the only way to go forward, especially when equity is expensive in India, also in America. So one should think from an angle that how can I invest in other asset classes and other geographies? Like this year, Europe did so well, China did well. And we were invested in China big time, and it's on public, everybody knows it. That market, the tech market in China almost doubled. So I think a multi-asset approach is one should to take it. So I would like to show this for people who follow me on LinkedIn. They would see that we were sending these updates every month. And we wanted to run a multi-asset portfolio for our clients who are very sophisticated in nature. Few of them have large portfolios. So we actually started with domestic equity, which was only Nifty, just with 3%, because as you all know, Nifty was very expensive around in Jan 24. And small and mid cap was just going up, and we never liked it because it was not. We put in a lot of money in China because China was very cheap. China was available at 8.5 PE tech, whereas US was available at 20, the same quality techs. So it was a steal. We bought that, and that was the only international exposure we took. We didn't buy America also. And I think China, that time when we entered 𝗦𝘁, which is available in ETFs in India, it almost doubled. So I think it was a jackpot for us, and it helped our portfolio a lot. And that was the only sizable position in equity we took. The long-term debt, because if you remember, and that's the reason I say that understanding interest rates are very important for your business and for your portfolio also. Now just imagine 1 year back, the interest rates was how much? 7.2%, 10-year bond yield. Now, the same interest rate after the cut is close to around 6.5, and it's going to go to 6, and terminal rate is going to be 5.5. So all the family offices, including us, we started taking long-term debt. And all those long-term debt, if you actually compare with FD, have actually given us 13% return. Now, isn't it fantastic? Without taking any equity risk, you are getting 30% return. And you're giving the money to Government of India. So this is another thing that you should take into account, and that should be a part of the portfolio. In fact, one of the family offices whom I met, and they have close to around 10,000 crores. And a very, very large portion of their debt portfolio was long-term debt. And they say, Abhishek, we don't sell. Because in the long term, India interest rates are going to come down. And those long-term debts that you have given to the Government of India, it is going to give you more than 8.5% in the long term. So why do you put your money in fixed deposit? Just take those debt. Government of India is not going to default. And just keep that long-term debt, and it's a great portfolio, great asset in your portfolio. This year it gave 12%. Next year it could possibly give 8.5%. I don't know. But it's a great asset to be in your portfolio. Short-term debt, we didn't keep anything, but now we are increasing our short-term debt exposure. Gold and silver, again, we bet last year, and of course, I should have bet more, but still it worked very well. Gold and silver both went out, though I don't like them anymore because it's a crowded trade. People still are holding on to gold and silver because this feeling that the US dollar is going to get very weak and the world is going to crash, and get to gold and silver. But I think too much of return have come to in very, very short time. And generally, as a person, I don't like, I don't like getting into trades, a position which everybody knows. We like to take positions in trade where people are normally don't take an exposure. Now you talk to any wealth manager, he will ask you to take a silver ETF. So once everybody's talking about silver ETFs, we are out. I don't know whether it's going to go up or down, but at this point of time, our understanding says that wait for some time. So the valuations which I was mentioning, the valuations are very, very high. If you see S&P historical valuations are close to around 16, 17, and today we are sitting at 21x. In case of Nasdaq, also we're sitting at 25x, whereas if you actually see the 20-year median is close to 20. So why are you paying 20-25% premium when there is an element of US recession coming in? So I don't like America anymore. Though I've been a strong believer that it's one of the best equity markets in the world. But even if it's best, there is a price to it. And if the price is very high, I don't like it anymore. So we are out of America in the last 6-8 months. And I think we all know, Warren Buffett is holding, I think, $300 billion worth of cash. And a lot of large investors I'm seeing, they're selling everything in America. So I think we should be very careful. And if America falls, I think impact is also going to be in India. This decoupling and all these things are not valid if something breaks in America. India will also correct. Yes, because we are a consumption-driven economy and we are growing at 6.5%, we will not fall as much. But even in 2008, we fall by 50-60%. So be ready that if something happens there, it's going to impact India also. Valuations in India, I think we are close to last 2-3 weeks, the markets have gone up. FII flows have started coming in. Even though the earnings number is going to clock somewhere around 9-10% in FY26, but I think we have to be very, very careful because markets have already priced in that earnings are not going to be great, and it's already at 22 after they run up. So I think valuations across small and mid cap, we were out from last 1.5 years. We never liked it. Now also we don't like it. We don't touch small and mid cap. Even if you want to take exposure, we go and take exposure with good flexi cap funds where 80-90% is large caps. Some would be mid and small, but we would never take a mid cap or a small cap fund specifically. Just look at the valuations, look at the P ratios. I mean, if a economy earnings are around 9-10%, how can you give 30, 40, 50, 60, 70, 100 P multiples to these stocks? So it's more of a momentum play. But if something breaks, all these stocks are going to go at half. So I think we don't like mid and small at all. And large caps, we are comfortable. We are sitting at 40-50% exposure out of 100 rupees. We're sitting at 50 for clients. In a model portfolio, we are at, I think, 30-32. We can go a little bit more aggressive there. But 50% is what we like, equity exposure. We don't want to take more than that right now. So this is what I was saying. The 10-year bond yields have crashed in India. So now, whatever long-term debts we had taken, now we are booking some profits there. We have the chance we have got in the last 1.5 years. But if there's a retracement back and the 10-year goes up to 6.5, 6.7, please talk to your wealth manager, talk to your bank, and take those long-term bonds. Give the money to Government of India. I think you can get 10% aram se, and you're going to get that very, very comfortably. So take that note. So equity valuations expensive. Long-term bonds are great options, provided we see some retracement, because most of the juice has already been taken now in the market. US equities are not very cheap. So be very, very careful in terms of US equities. China equities also we exited. We're no longer in China because China has a beautiful run. Now we would wait for at least 20% correction to start entering again. But China also we are out. So we are holding a lot of cash now. Whenever the market give opportunities, since we are a multi-asset, multi-geography guy, we will enter. As of now, we are happy with 7.5% what we are getting in arbitrage funds. So this is the fund we were talking about. So we had large exposure of this fund. So last 1 year, we earned 12.5. And you see all the Government of India bonds. So there's practically no risk. So global equities, as you saw, money have started going to Europe. Money has started going to Japan, Hang Seng Tech. And Japan has corrected now, but a lot of money had gone to Japan. And US is not moving up anymore. And India has moved up only 5%. So the money is going to be in different markets. So be very careful by putting 100% in India. India में डालना है पैसा, India में पैसा बनेगा. But at the same time, किस भाव में डालना है, that one you have to be very careful. So if anybody is selling you mid and small at these prices, be very, very careful. SIP वगैरह and all that is okay, but if you start putting money in SIPs at mid and small cap at higher levels for a very, very, very long time, almost 8-9 years लग जाएंगे वो SIPs को profit बनाने में. तो SIP करना है तो flexi cap में करो. Don't do it in mid and small, because like in 16, 17, 18, mid and small was down and people had tears in the eyes. So be very careful when what size of mid and small is in your portfolio. So what is doing good? People are liking quality. People are liking stocks which has low volatility. People are liking stocks of larger caps. Value is doing good. And momentum is not doing good anymore. So people are like, safe jagah paisa dalna hai. Quality mein dalo, momentum mein mat dalo. So you'll see recently the banks went up and certain other sectors which were low price and nobody was interested, hated sectors have started going up. Now this is great, you know. This gives us an indication that how the mutual funds have been holding cash. Why are they holding cash? Parag Parikh is holding 24% cash. Now that's one of the value investors we all know. Around 1 lakh crore funds, they're holding cash, 24% cash. So 24% cash and mota moti that everybody together is holding 3 lakh crores of cash. So they understand that there are going to be chances in the market where market is going to give you a chance to enter. So keep tracking the good funds like what is HDFC doing, what is ICICI doing, what is Parag Parikh doing, and with the cash, and what is some of the good PMSs also doing. Some of the PMSs are sitting in large cash. So like us, a lot of these guys are sitting in cash. So some people like to invest in equity 100%. It's their call. But we as multi-asset guys, we like to buy things when the opportunity is there. Otherwise, 7% कमा रहे हैं, क्या problem है? इस तो नहीं है. और बाकी अगर if you get one cycle right, 20-25-30% कमाना कोई बड़ी बात नहीं है. You can earn it in 3 months, 4 months. But not having FOMO in this market when the neighbor is making money, that is real patience and discipline. So we don't have FOMO, and some people do have if the neighbor is making money, but we like to play it safe, comfortable, and risk बचाना है, returns अपने आप बन जाएंगे. So the FPI flows have started coming in, but they are still in that zone where they're still waiting and watching. And if the flow starts coming in, there'll be a PE rating, despite the fact that the earnings are not there. So one has to decide कि आपको momentum chase करना है, सिर्फ flows के basis पे, liquidity के basis पे, या फिर आपको valuations का भी ध्यान रखना है. I would like to invest when I get decent valuations followed by flow. Second. So as we have seen that we have got very, very good returns in gold and silver. Now, can anyone say that what is a long-term average of gold returns and silver returns? Any thoughts? Recency bhul jao. What is the long-term average of gold and silver? 9%, 10%, 11%, 12%. Any idea? And type it there. Rajiv, 15%. No, Rajiv, 15% is not the right answer. Jayaraman, 3 to 5, no. It's a 10% product. 6-7% की आपको ग्रोथ मिलती है और 2-3% की डेप्रिसिएशन ऑफ द करेंसी. और लास्ट 2-3 सालों में आपको बहुत बढ़िया रिटर्न मिल गई है. So I believe that anything has given you double of the average returns in a very short time of 2, 3, 4 years, then it's a chance to sell. तो equity अगर 12% का product है निफ्टी, और निफ्टी अगर 3 साल 60% दे दे हमें, so if it gives me 20, I'll sell it because you have given me double returns. तो आप फिर अपनी positions कम कर लो. Similarly, अगर gold and silver पे इतनी अच्छी return आ गई है, and now everybody is talking about that, it's a time to start thinking. अगर आपने 1800-2000 में गोल्ड लिया और आज 3300-3400 गोल्ड है with rupee depreciation, then should you still be investing fresh money? If you're holding some physical, it's okay. Fresh paisa क्यों डालना है यार? So will it be able to give you 7-8% compounding if you compare it with debt for the next 3 years? That is 21% from here. If the answer is yes, खरीद लो. If the answer is no, and your opportunity cost is debt, then क्यों खरीदना है? So I am in the camp के एक बार रुक जाते हैं, जब तक एक बड़ी करेक्शन नहीं है तब तक हम उसमें हाथ नहीं डालेंगे. I'm very bullish on metals. I think metals are going to go up. Metals में बहुत दिनों से तेजी नहीं आई है, and if inflation is going up, hard assets, metals, commodities is something which is going to go up because global tariffs हो रहे हैं, silos बन गए हैं, and demand of commodities is going to be there, and things are not going to be easily transportable. So some of the metals are going to go up. So either you take it exposure through stocks, or you just buy ETFs, or to take it from mutual funds, take it internationally. But I think that should be a part of your portfolio. So for us, we will take large position in metals when we see a little bit correction, but we would look at some ETFs on metals. Gold valuation, as we say, it's kind of overvalued for me. It's gone up a lot. लोग उस समय नहीं खरीदते हैं जब ये लेवल्स होते हैं नीचे के 14, 15, 16, 17, 18. So लोग जब खरीदते हैं जब एक एक्सट्रीम लेवल पे चला जाता है, and that's the time when you see that most of the investors, if you see over here also, was saying that gold is kind of overvalued, and large people are start saying this, analyst, and then the crash starts happening. अभी भी वही हो रहा है. So I think I'm done with it. Guys, I wanted to show this chart to you to say that gold or silver ऐसी बात नहीं किसी ऊपर ही जाता है. Doesn't go one-sided. I was in the market very much between 2013 to 2015. Last time the silver had gone to 50,000 in INR terms, and it took it almost 10 years to actually break that level. तो आपका 10-year पैसा तो बना नहीं, 7% yield में बन जाता bonds में. In fact, you broke money. It had come down to 25-30,000. So if you see 13, 14, 15, 36%, 19%, 11% fall in USD terms. In INR terms, 28%, 17%, and 7%. So almost it has fallen down to 50%. तो ऐसा नहीं है कि ये गिरते नहीं है. Don't consider that you hold it forever and you keep it. These are volatile assets. Even with gold, if you see that number, the gold also falls down by 30-40%, and then it remains flat for 7-8 years. So don't take it as only as a safe asset. क्योंकि अपने को रुपी डेप्रिसिएशन मिलता है 2-3%, तो हमें उतना नुकसान नहीं होता है. We cover it up, but it can stay flat for a very long time. I hope you can remember those times when it actually happened. So people are showing this gold to silver ratio, and you will see a lot of articles on this, that silver is a better buy than gold. Yes, from the chart it looks like that gold silver ratio is all-time high. तो गोल्ड उतना नहीं बढ़ना चाहिए, सिल्वर बढ़ना चाहिए. But as I said, सिल्वर का रहना बहुत हो गया. Until unless silver falls down by 20-25%, I'm not interested. It can keep going up. I could be wrong, but from a risk-reward margin of safety, I don't like it. So quickly, takeaways. We are seeing broad dollar weakness globally. Cross currencies are buy on dips. Be very careful when you take cross INR positions, because you have double risk. And cross INR, like we have seen in Euro, we have seen in GBP, it just moved 10 rupees in 6 months. So be very careful of cross INR positions. Look at the long-term US inflation numbers. If inflation comes down, they will start cutting rates very fast. That's the time you have to start looking at long-term loans in America. Watch CNH, CNR, and REAR carefully, and keep that in your desktop to keep tracking it, along with crude and other things, what I just discussed. Never ever take loans in any of these cross currencies, no matter how lucrative it looks like. अगर ये currencies बहुत strong हो गई, तो फिर आप देख सकते हो, at least I would say 15, 20, 25%. Otherwise, ignore anybody who comes out with that idea. RBI interest rates have already started cutting. We expect long-term rates to bottom at 5.5. इंडिया में ऐसा कोई खराब नहीं है कि रेट उसके नीचे जाना चाहिए. कोविड के समय गया था, but I don't see any reason. If you have taken 10-year long-term investments, then in that case, then start booking some profits or a higher modified duration at 12.5, 13 in case of Nivesh. We are exiting some long-term bonds for retracement, but this is going to be a perennial strategy. Start taking long-term bonds, and I strongly advise that आप fixed deposit में पैसे मत रखो. Look at these bonds; they are much better. And look at arbitrage funds also, because from a tax angle, arbitrage is better than FDs. FDs तो कोई डालता ही नहीं है आजकल. Equity valuations are expensive. Large caps, I would say, are still expensive to the extent of 15%. Small and mid तो बहुत महंगे हैं, touch ही नहीं करना है. And quality and low volatility is going to perform better. And gold and silver seems to be crowded trade. From my angle, some of the people still like, you can still have 5-7% of the portfolio in that, but sizable position लेने का समय चला गया. And metals could have a bull run. So as we know that now this is something that you need to see, that stocks का earning yield 4.5% ही है, whereas bonds का earning yield 6.5% मिल रहा है, because the P ratio is to 22.5. तो from a risk premium angle, इंडिया के स्टॉक्स सस्ते नहीं है. तो ये जो है ना कि बाय इक्विटी एट एवरी लेवल, आपको एक अर्निंग्स यील्ड भी देखना पड़ेगा. अर्निंग्स यील्ड 4.5 है, बॉन्ड 6.5 दे रहा है. रियल एस्टेट इंडिया का मुंबई रेंटल यील्ड्स 3.5-4% दे रहा है. गोल्ड में कोई फिक्स यील्ड तो नहीं है, इट्स एन इन्फ्लेशन हेज. एंड कैश एंड ओवरनाइट फंड 6.4 दे रहा है. तो until unless we see a solid re-rating because of a liquidity gush from America in India, कोई जरूरी नहीं है स्टॉक आपको कंसिस्टेंटली 12% कंपाउंड देगा इस समय. तो आपके पोर्टफोलियो में बॉन्ड्स, प्राइवेट डेट होना ही चाहिए एज अ पोर्टफोलियो. इट शुड नॉट बी 100% स्टॉक पोर्टफोलियो until unless you are a great stock picker. तो अलग बात. रियल एस्टेट अगेन काफी जगह प्राइसेस ऑलरेडी गिरने लगे हैं. until unless you get the right places, be careful. अब वो तेजी वाला 5 साल निकल चुका है. Some of the pockets are still going up, but supply आ गया मार्केट में. So a lot of places, I think prices have already started going down. And that's it. So now IFA as a firm is developing both these companies, and Billionz is doing extremely well. And we are advising a lot of large family offices in their overall portfolio risk management and ensuring that they get a risk-adjusted return on their asset. And FX, of course, we have been pioneers in the business for a very long time. People know that. So please get in touch with us if you need anything. And I'm opening this for question answers. Please throw your questions. And my team, they must be answering some questions of yours, but I'll be happy to answer anything that you want. So please open it for question answers, guys. Guys, can you open it for question? Because I cannot see any open questions. I think the question answer is not on. Or you can type on the chat box also, so I can access the chat box. तो विपिन जी, डॉलर का ब्रॉड ट्रेंड तो वीकनेस का ही है, तो डॉलर रुपी तो हर लेवल पे बेचना है. एंड ब्रॉडली यूरो में अगर 300-400 पॉइंट की करेक्शन आती है तो यूरो खरीदना है. एंड डॉलर इंडेक्स ब्रॉडली वीक है. वैल्यूएशंस आर एक्सपेंसिव. हमने तो 50% कैश रखा है, 50% इक्विटी में इन्वेस्टेड है थ्रू सॉलिड फंड्स, but we don't like to be 100% invested in equity right now. जापान की इकोनॉमी अच्छा कर रही है, एंड इंटरेस्ट रेट्स ऊपर जा रहे हैं, एंड दैट इज शोइंग दैट पैसा जापान में फ्लो करेगा, एंड जापान की इकोनॉमी आने वाले समय पे अच्छा करने वाली है. Warren Buffett ने काफी companies में invest किया है. They have invested a lot of companies in trading companies. They're saying that it's going to be a very good long-term future of Japan. So I would not short Japan at all. Mr. Mandalia, I can't forecast what is the rate going to be in dollar rupee. But yes, I can say, and my clients know it, that at 84, 84.50, we didn't sell dollars. We were waiting for at least 85 plus levels. And now at 86 levels, today we sold aggressively. And even if it goes up, we're going to sell dollars aggressively. And imports हमने सब 84, 84, 20, 30 पे हमने long term imports अपने cover किया. So somebody asking that, Jaraman is asking that what if they scale back tariff imposed? I think they're already scaling back a lot of tariffs. I think tariff would become something standard. Trade is going to happen, but it's not going to be the same again. So there's going to be some inflation in some of the commodities. And in that case, we are going to see growth slowing down across the world, especially in America. That's my feeling. And commodities is definitely going to be bullish, especially the base metals, copper, aluminum, everything. And equities, I think US में 15 साल का bull run चला है. थोड़ा breather दो. Get to the decent valuations. I was hearing Stanley Druckenmiller, he was saying यार मैं दुनिया का पैसा तो मैनेज कर नहीं रहा, तो मैं 25 के 24 के PE में इक्विटी क्यों खरीदूं अमेरिका में. If it's going to be 17, 18 PE, I would invest. But इतने high valuations पे growth slowdown में इतना महंगा इक्विटी क्यों खरीदना है. Be ready for volatility in rupee. The walls was 2.5%, 3% for a very long time. And now people have understood that RBI is okay with high walls. तो रुपी में जो 1-1.5 रुपए की मूवमेंट होती थी, अब वो आपको 3-4 रुपए की मूवमेंट साल में दिखेगी. The realized walls is close to 7%, 7/8 are 56, so 5-6 रुपया. तो अगर realized walls नहीं भी हुआ of expected walls, तो भी 5 रुपए की मूवमेंट, 4 रुपए की मूवमेंट अब नॉर्मल होने वाली है. So whenever there is a very strong market, start covering imports. The rupee is very weak, start covering exports. But don't think that it's going to be a very, very safe currency going forward. In fact, NDF में भी काफी action होने लगा. राजीव, स्टेनलेस स्टील फ्यूचर्स के बारे में मुझे आइडिया नहीं है ज़्यादा, बट आई थिंक एज आई टोल्ड यू दैट ब्रॉडली ग्लोबल कमोडिटीज तो ऊपर जाएंगे. स्टेनलेस स्टील आपको ज़्यादा आइडिया होगा मुझसे. Great. So, my dear friends, I think we have answered broadly all your questions. And with this, I would like to take your leave, and I would like to thank you all for being part of this session, taking out 1 hour of your time. And I hope I could create some value for all of you. And we'll be having these webinars 1.5 months every. Stay tuned, follow us, and enjoy. And like always, we will keep adding value in your life and in your business, like always. Thank you. Thank you so much. Enjoy your weekend.